Three space ETFs. 100% upside? That's the question. Before SpaceX introduces and does their IPO, there are three ETFs that we have already seen that's had good growth and could have great growth in triple-digit numbers. Let's look at them today.
What if I told you the biggest IPO of the decade hasn't even hit yet, and most investors aren't even positioned for it? Hey guys, I'm Doug the Retirement Guy, and welcome back to the channel. We're doing something unique here today. SpaceX is reportedly targeting a mid to late 2026 IPO of their stock, with an valuation that could reach about $1.5 trillion. That would make it one of the largest market debuts in history. And here is the key point most people are missing. You don't need SpaceX to directly benefit from it. Today, I'm going to break down three space-focused ETFs that could benefit the most once SpaceX goes public, and why I believe some of these funds still have triple-digit upside potential over the long term. This is not financial advice. This is more for educational breakdowns and educational information. I am not a licensed financial advisor. I am 100% just a retail investor that does a lot of research and a lot of reading and a lot of diagnostics. So the breakdown is going to be is how the space investment ecosystem works. And we're going to get into that today. Before I do, I got to do a shout out to all of our Patreon supporters. Thank you for supporting this channel. Without you, it'd be tough to keep this thing going. Also, all of our YouTube members, same with you. Thank you for your support. And all of our subscribers. And if you're not a subscriber, don't be afraid to hit that subscribe button. Hit that bell notification. You don't want to miss a single one of our videos. All we try to do is help you grow your portfolio. Let's get into today's video.
Guys, so important notice to everybody, this presentation was designed and provided to you by an educational purposes only and is not constituted financial advice. Educational purpose, no financial advice. Distributions are not guaranteed. The yields are subject to change without notice. And if you need any professional help, if you need questions on the financial stuff, always contact a financial professional. Don't just watch a YouTube video. Don't just ask someone who sounds like they're intelligent with it. Always ask a professional first. The biggest IPO opportunity of the decade. SpaceX IPO targeting for that mid to late 2026. The projection valuation is going to be about $1.5 trillion. This will be one of the largest market debuts in history. The key insight most people are missing is they do not need SpaceX directly to benefit. SpaceX provides an indirect exposure to the space revolution that's happening already. So why is space massively undervalued? Before we talk about the ETFs, we got to talk about the scale. In 2019, there were 102 orbital launches worldwide. Just 6 years later, in 2025, the number has jumped to 342. That's more than double the number of launches that we've seen at the peak of the original space race back in 1967. And they're still early. There's still room for all this to grow. When we start looking at the space-based telecommunications expansion, the satellites, Starlink, Project Jupiter, OneWeb, the government defense initiatives like the missile defense and space infrastructure are all moving forward. It is likely to head towards thousands of launches per year. So when we take a look at the total market, if SpaceX IPO sets a new benchmark of how space companies are valued, the entire sector is going to get repriced upwards. And that's where our new ETFs come into play. So you take a look at everything we're talking about. The launches that are going to start happening even more and more. SpaceX operating as a true hardcore for-profit business. And the benefits of the whole ecosystem that's going on in the outer space side of it. These three funds, I'm telling you, are going to take off into outer space. So do we really have to wait for SpaceX? No, we don't. Because with those launches, with everything going on, the new three ETFs are going to make things change. And they've been out for many years already. The first fund we're going to look at is called Procure Space ETF. I love the name UFO. The Procure Space ETF UFO is an exchange traded fund that's based on the S Network Space Index. The fund tracks the tier weight index of the aerospace companies located globally. This is a pure play space exposure, most focused on vehicles for investors seeking direct exposure to the space economy. At least 80% of the net assets are invested in companies with 50% plus revenue profit from space related activities. Now, you would think it's crazy, but their expense ratio is only 0.75, which is $75 out of $10,000 invested is going to what I call operations or expenses. The rest of your money is going into investments. The Planet Labs Earth Imagine analysis operate one of the largest constellations of Earth observing satellites. The ROKT Lab, small satellite launch services, specialize in rapid and reliable access to orbit. Look at the performance of the fund already. You know, we have a 5-year history already on this fund. We got 24% in 1 month, 24% over the first year to date, which is what, only 29 days so far. 1 year up 97.45%. We go all the way out 5 years. We're at 13.44. We go out to inception 11.75. So all positive, positive, positive. We take a look at the total return. You're looking at 97.45% over the past 12 months. And the price of the fund is ranging between 1840 and 4855. Net assets $331 million as of January 26, with only 52 holdings. When we take a look at this a little more deeper into it, look at the numbers. Look at the rocket that it's done in the past 1 year. Now, this fund came out April 11th of 2019 when we were only doing a few launches. Now we're doing a bunch more launches. These guys are part of the already there. UFO is already doing what SpaceX is planning to do. So you have a big assets. You have over 7 million shares already outstanding in this ETF. Now, these are not built for income. These are built on growth because they pay out a semi-annual payout of their distribution. Now, the yield, 0.34%. I'm not going home bragging about that one, but I will go home bragging that I grew my fund by almost 96%. So you look at the distributions, very, very minute, 9 cents when they do pay it out, but it's really built on a growth factor. A little drop off in April, huge rocketing after that. I know we're using the terminology with the rockets, but look what it's done. It's on a tear, and it's still a fairly inexpensive fund. Our second one is ARK Space and Defense Innovation ETF, ARKX. Now, ARK Innovation is, again, an ETF. It's an exchange-traded fund that mostly invests in stocks based on particular themes. The fund is actively managed and seeks long-term capital growth for companies globally involved with or the benefit from these innovations. Okay, a 30.05 total return. So it has a strong performance. Not as big as what we just saw, but a very, very solid, strong performance. Strategic diversification. It exposes space, defense, drones, and enabling technologies. So this is not just about a rocket going up or anything like that. They have multiple different areas that they're going to. They do have key holdings in Rocket Lab, L3 Harris, and Kratos. When we look a little deeper into it, again, their strategic diversification. They're trying to show you that they're full diversification across the board. They're doing it with space. They're working with the defense. They're enabling AI technologies. So these guys are heavily balanced across the board. We look at their performance. 1 month up 14.7%. Year to date up 16.84%. 1 year they're up 62.71%. Since inception 10.94. Let's pop the hood and look at this one a little closer. $1.09 billion in assets already. And this fund came out March 30th of 2021. 32 million shares outstanding. We look at their track history. Again, up 62% this year alone. They had the little drop off in April, but the recovery ever since is just going straight up. Now, again, I say this is for growth, not income. If you're looking for income, this is not the right view channel video to be watching, because this is all about growth. Big growth in short periods of time. Now, some of these numbers I'll tell you are going to be scary, how big they are. But you have to remember these numbers can change at any time at all. This one doesn't even pay an income. This one has no dividends at it. So it's about buying a share at a certain price and then letting it grow and selling it off. And that's how you're going to do, is to make income that you can pour into other funds to generate income. Our number 3 fund is the Spider S&P Keno Final Frontiers ETF, or ROKT. The State Street Spider S&P Final Frontiers. Again, this fund tracks and tier weighted index of U.S. equities associated with space and deep sea explorations. So not only are they out of space, they're under the water as well. This was a unique thing that I saw across it. They have that space exploring the explorations, companies that are engaged in satellite technology, launch services, aerospace innovations, plant labs, rocket labs, and new space ecosystems. But they're not done there yet. They're also deep sea, reducing the regulatory barriers of offshore explorations, U.S. seabed exploration, and mining opportunities. Deep sea mining, oceanographic research, and subsea infrastructure, they got both sides of the world covered. Now, they show a 79.17% total return of last year. The fund itself is up 75.71%. Just like before, when I did the research and found these, I'm like, wow, these things are just crazy growth funds. Now, this one does a little bit better. It does pay quarterly, but again, we're paying a 0.34%. Very minute dividend payout. It's not designed for that. This fund came out October 22nd of 2018. $62 million already of assets. 620,000 shares. So I'm going to say this is probably by share count one of the smaller ones, but doing just as well as the big boys. And doing it since 2018. So 1 month, you're at 21% growth. Year to date, 22.09, so 29 days. And then you have 1 year, they're up 76.61%. 5 years, they're up 22.89. And since inception, 19.73. Remember, none of this is income. None of this is, how much of my yield I'm getting, anything like that. This is all about growth of the fund. And when we look at since inception, almost 8 years ago, you're up 19%. And that's the average that you're getting each and every year. 5 years are average 22%. So some big numbers are happening in these funds. So the ETF comparison I show you, UFO brought big numbers, 97% 1 year. ARK is doing 62, and ROKT 75. Each one is working with the plant labs or the rocket labs. Each one has their unique space that they're doing to, and each one works differently. So these are three very strong space-oriented funds working in different areas. So the investment risk and considerations. Space investing, the volatility, the speculative, and best for long-term horizons. Market volatility. Space ETFs exhibit high price fluctuations than traditional investments. Performance can swing dramatically in short periods based on launch outcomes, regulatory changes, and market sentiment. Technology risk. Rapid technology changes in space sector can render existing capitals obsolete. Companies most commonly and continuously innovate and maintain competitive advantages to maintain their market positions. Regulatory risks, you don't know what the government's ever going to do. You don't know what they're going to talk about. And investment considerations. ETFs may become concentrated in specific space segments, and the performance depends on the ability of the companies to scale their operations. Space investment, sector-wide re-rating. SpaceX IPO could trigger a market-wide reassessment of space companies. The ETF exposure, space ETFs provide a diversified access to the space revolution. Triple-digit potential that we talked about, the space ETF positions are significantly upside as the sector continues to expand. I personally, the strategic positioning, UFO is actually the biggest one. ARK is 2 and ROKT is 3 because of what they do. And I tell you, each one's a little different. Now, these are not rated by what I think you should buy, which I would never give you a suggestion of what to buy or not to buy. It's all about your own personal self. What's your risk factor? What is it? Does it fit your portfolio? Not fit your portfolio? What are you trying to do? And the step is this. UFO is a pure space exposure. ROKT is a dual front exposure. You got space, you got deep sea. And then you have ARKX, which is the innovative space across space and defense. So you can see how they all fit. They're all different puzzle pieces. They all can fit together. Guys, let me know what you think about these. Is this something interesting? Do you think this could be a potential in your portfolio? Or is this just a waste of space?
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug, the Retirement Guy.